Strat B is a strategy which intends to capitalize on limit orders in the direction of fundamental bias. In the market, there's often a directional bias. This bias can come from future fundamental expectations and outlook. So for example, if the USD is going to see, strong NFP or expected to see strong NFP, we can start to see strength in USD bias earlier in the week as the market's starting to price that in, right? So that's what it means by future fundamental expectations and outlooks. It can also come from slight strength weakness over time that is not so pronounced in its trend like it required in Strat 1. Sometimes there's a trend, but it's not so pronounced, right? The idea of Strat 2B is that if the market has established a significant historical respect or demand zone, okay, as an example below, as the price is trending to the upside, we will look to place a limit order at completion of exhaustion to the upside. In the example below, the buy limit order entry to the upside would be high probability resistance at its demand zone will now become support. Additional confirmation would be support from the 38.50 and 61.2% FIB. Now I know that could be a little bit confusing. Now let's simplify the complicated here, okay? Let's give you a little bit of an example. So let's say, for example, all right, in the previous Strat 2A, right, we said we're looking for full consolidation range to capitalize on full consolidation range. That's because fundamentals are flat. But let's say, okay, Aussie was actually a positive 2, and then yen was, for example, a negative 0.1. Okay, this is still relatively close in terms of fundamentals, but instead of the trend line looking like this to the upside, maybe it looks like this to the upside. So we have slight bias, and that's what we mean. Okay, so when we have slight bias to the upside, do we want to enter to the downside? It depends. If the bias reaches a significant area of sensitivity, maybe we find Strat 2C, which we'll get to. But in terms of Strat 2B, and specifically Strat 2B, we don't want to enter against the trend. So in this case, for example, let's look at this. Okay, so we have a daily zone. And as we can see, this has been a significant area of resistance, which is now going to become support. So this would be a buy limit order entry for Strat 2B. Why? Because let's say hypothetically, as you can see here, we have an uptrend. And let's say it's just a minor uptrend, but still we have upward bias. We have upward bias, kind of like how Harvard has a bias for, blonde, rich, white kids that come from prep schools, okay? We have an upward bias, all right? Which means what? When we see the push breaking former resistance, exhaustion, this becomes a high probability buy limit order as long as this demand zone shows historical respect. Think about this. We have direction slightly to the upside. We have historical resistance. We have a push, exhaustion. What do you think is going to happen at this level? Of course, we're going to see an impulse move to the upside. Of course, we're going to see some respect. Of course, there's a market grab. So Strat 2B, in this case, okay, as you can see here, this is Strat 2C. Don't worry about this right now. We're going to get to this. This is Strat 2B, which means what? Push, exhaustion. Sometimes we have confirmations of these exhaustion. For example, when we put our FIB, what do we see? Our daily zone lines up with the 50% Fibonacci. So we can add confirmations. This is just adding probability to the success. Now, unlike strategy 1, we're not looking for some, 3-day, 4-day move to the upside. We're looking for quick ins, quick outs. We're going to be in and out of there. Okay? So it's important to understand that Strat 2B is saying, okay, this is going to be limit orders, and in this case, because we're moving to the upside. So let's zoom it in a bit. Okay, so Strat 2B, as you can see, we're only looking for limit orders in the direction of the trend. Strat 2A, we're looking for sell orders and buy orders for full consolidation range because fundamentals are really flat. When fundamentals have a slight bias, we're only looking for limit orders in the direction of that bias, but quick in, quick out. It's not like Strat 1. All right. So now let's get to Strat 2. Strat 2C, excuse me. Strat 2C is going to be actually, let's not go too fast. let's finish off with strat 2B. What are some of the characteristics? Okay, strat 2B, okay. Fundamentals are slightly biased either to the upside or to the downside, right? Not necessarily drastic. It doesn't necessarily have to be a drastic trend. Clear horizontal levels of historical sensitivity demand zones, easily to identify support resistance for a proper push and exhaustion. So for example, if this zone is not really respected, maybe it is now, but maybe historically not necessarily respected, this doesn't become necessarily a high probability exhaustion. This zone has to be historically respected, and not just like you have to work hard to find it. Like you can see clearly that that's an area of historical sensitivity. Okay, horizontal respect with limited stop hunts. Again, for example, if we have a stop hunt here and a stop hunt here, there's a probability that that's going to be a stop hunt here. So we have to understand that if there is stop hunts at previous contact of area sensitivity, our probability of success drastically lowers. Okay, so we have to see actual sensitivity at that level. Okay, and why are we increasing our risk? Why is it now 1.2 to 1.5 instead of 1 to 1.2? Because we're entering a BLO also in the direction of fundamental bias. There's a slight bias to the upside. So we have slight fundamental support. Thus, if we do find an entry on strat 2B, it is a little bit more high probability, so we can risk a little bit more and get a little bit more value per pip. Okay, with strat 2B, we will aim to close half our position at TP1 and trail SL for the remainder of the push. Why is that, David? Why is it that for strat 2A, we have to close out at full consolidation range? And why is it for strat 2B, we close out half position at TP1 and we trail our SL? The reason is because there's a possibility with fundamental support that we start to make our way, instead of a short-term quick in, quick out, we may find our way finding ourselves in a significant push, which obviously would be great since our value per pip is significant. So strat 2B, we will close 50% of the trade out at TP1, and then we will start to trail our SL. We move it to entry first. Once it moves to the upside, we bring it up a little bit. Okay, so there's going to be a lot of trade management. Now, that's one of the things that will change with what we're doing, okay?